Hello, folks. I hope you're all doing amazing. My name is Marcello Kolax, and today we are having a look at European energy markets for the week starting 11th of December 2023. The year is almost over. I hope you are slowly getting in the Christmas mood. Here in Singapore, where I live, they started with that in late October. So we still had the pumpkins out for Halloween, and they already put up the Christmas tree. It was quite surreal. So today we're going to start with the TTF front month. We are looking at the weekly chart, and we did switch from midterm bullishness to midterm bearishness immediately without switching neutral first. Why is that? Well, we do see that we did have this midterm uptrend channel going on for quite some time. I'm just zooming out for us to see what happened. So, of course, you all remember since, was it September or something, 2022, we moved down. We had Nihama, we had, what was this here? This was the LNG strikes, the planned LNG strikes. And since then, we have come down. So, on the weekly chart, one candle represents 1 week of trading, right? So, and now we do see that we did have two consecutive closes below the channel. Okay, so that's a bearish sign. The market turns bearish. We did close below this green candle here, another sign for bearishness. And we do see that tools overall are still bearish. So we do see that we are about to get a bearish crossover on the 8 and 12 exponential moving average here, which is usually bearish for the near term. And then, of course, the MACD also turned below its zero line again, which is more like for the midterm. So we are fairly bearish. We can see that the volume was just slightly above the average. So the white line means average. That's the average. And the only thing that's a little bit worrying is that the stochastic picked up a little bit, but there's no signal given here. So what does that mean? Bearishness on the midterm outlook simply means we're looking more intensely for bearish as for short selling opportunities on the daily chart. So now we're on the daily chart, and we do see we have been having like a downtrend for quite some time. So yeah, absolutely. So we did get a bearish crossover back here, but now we do have also the confirmation from the weekly chart. So we are more actively looking for short selling opportunities. And we might have one happening here already. So you can see last Friday, we ended the week with a bearish engulfing, which is usually a bearish signal. But the thing is, we didn't have much of an uptrend to reverse. But yeah, the idea is still to go bearish. Thereafter, we are caught within this like 38, 40.67 range. So I want to see that resolve before moving lower. And that is also the preferred case. Maybe like a little bit higher, but this is shown by the, there you go, by the bullish stochastic signal. But you can see like overall, the peaks are still lower. And we also do see that the moving averages are firmly bearish. And we do see that also the MACD is still firmly bearish. So overall, the idea is still we will resolve this lower. What will happen this morning? Well, on the on the 15-minute chart, we do see that we did resolve here. So here was a channel. I removed this. So we removed the channel. We resolved it lower, and we've been pushing lower ever since. Now, we ended last week at a trough. There you go. And which made me, and we got a bullish signal on the stochastic as well. So we are looking for a little bit of upside. We do see that the MACD as well is like pulling higher a little bit, but no signal given yet. So this setup simply made me put on the fib retracement. So we're trying to retrace this entire down leg, and we are trying to see how high we can retrace. So here's the thing. Anything below the 23.6% fib, which is 39.3, is just considered noise. So we would just simply continue lower. If we break above 23.6, we could make it to 38.2 or 50 or even 61.8%. It cannot be said right now, so that's why we have the question mark here, how high we can move. But the idea is overall to at some point top out, which could be anywhere between 61 and 38%, and then we move lower still. Why is the idea to first move higher and then lower? Well, the idea to move higher is confirmed by the stochastic giving us a bullish signal. Yeah, and then on the daily chart overall, we are rather bearish. So that's why the idea is after this correction higher, we could turn bearish. And this is also reflected like on the daily chart, as we can see here. There's like mildest inclination of maybe some marginally stronger gains, but ultimately the idea is still to move lower. All right, so that is it for the TTF front month. And we are now turning our attention to Brent crude. So on the weekly chart, we do see that we have been moving into an increasingly tighter range. There you go. Here is the triangle that has been forming. So you can see we had a good uptrend, and then we started seeing lower highs, but also higher lows. So of course, this is a triangle, and you can see 1, 2, 3, 4, and now we are potentially making a fifth one. So as long as we only have 4 hits, it is tentative. And these can, and in this case they do, form over like multiple months. So it can go on for quite some time, since Q1 2022. Jesus, okay. So what is happening now? We are essentially bearish with this down leg here. Because remember, in the midterm in the clever markets, methodology is described as something between between 1 and 3 months, right? So this year is bearish now already. We did get last week a really high volume bearish candle. Nothing is really happening all that much on stochastic. It's just a little bit flip-flopping, but no bullish indications or anything like that. We do see that the MACD has been and still is pushing lower. Also, in the more shorter term, we do see that the 8 and 12 exponential moving average are pointing lower. So what is going on? I do believe that with the evidence available to us right now, it makes more sense for the market to push below the triangle, 73.16, which then would, by textbook, I preface this, by textbook, would create a downside target that is at 13. Yes, right, 13. This, of course, is preposterous. This does not make any sense. And of course, this is not a target that anyone in their right mind would be working with. Where does the target come from? Well, essentially, what you're trying to do is we are taking like the widest point of the triangle. So usually we would calculate it. To make it visually more appealing, I'm just showing you. So it's this length here. And we would apply the length to wherever we break out. Let's say it's here. You can see if we go like all the way down here, we end up at 14, depending on where you put it, 13, that sort of caper. Ridiculous. Of course, nobody is working with that target. So what is more realistic is that we will take it one step at a time, and probably below the triangle, we'll make it to 70, and then we'll make it to 65. Okay, on the daily chart, not this one. Here, there you go. On the daily chart, we see that, all right, we've been in this descending channel for quite some time, since October, September even. And the market now seems to have made a new low. So can you see this? This here doesn't quite qualify for a morning star. So morning star candles pattern is like 3 candles. Would be one that is like a big red one. Then we have one that gaps lower a little bit, and then we have a green one that closes above the midway point of the first one. This isn't happening here. First of all, we don't have a gap, but the idea, like the sentiment, is the same. So the market was fighting for direction here. Nobody really won, but then the next day, so this last Friday, the bulls came out on top. And we see that on the stochastic, we did get a bullish crossover, so maybe some marginal gains, possibly towards 77.65, but right now I don't really think it can go any higher. We see that on the MACD, still firmly bearish, and also the shorter moving averages. So I don't think like all too much can happen here. That's why the idea is maybe a little bit higher, but ultimately the idea is to move lower. And remember, we are now also approaching the lower end of the triangle. Yeah. So all of this is becoming like a very important area of support. So on the 15-minute chart, we see that, let me just zoom out. So we've been moving lower, 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 and here still lower, and now we moved above this high here, right? So, but now we are pointing lower a little bit again. So here's the idea. It looks like we will continue lower on Monday morning because there's no bullish indications at all. But not physically, but from a price perspective, we want to see a push below 75.55, and then we would very likely continue to 75.23. And if we break below that, we could make it all the way to the lower channel. Now, here's the thing. With these channels, so channels in general, I find this very useful because if we hit the lower end and move higher and hit the lower end and move higher, this simply continues the trend. So good for us. And we can like trade the down legs in this case, yeah, because they are longer than the up legs. But here's the thing. If at some point we see that the down legs do not hit the lower boundary anymore, and we start doing things like this here, for example, yeah, so maybe we cross right below it or just right on it, but we are not really hitting the lower end anymore, or something like this happens, yeah, we're not hitting the lower end anymore. That usually means that with the next swing, we are usually then pushing higher. And that is very useful to know, right? Because we expect more a little bit like a weak open this morning, a little bit bearishness, but then maybe we would be able to see, I mean, if it was to happen, I would be able to see on the 15-minute chart how the next couple of days are playing out. This may be like 1, 2 days, 3 days maybe before we move lower again. So that's why it's so important to keep an eye on that. But for now, with the evidence available to us, the idea is for the market on the 15-minute chart at least to move also a little bit lower. And there you have it, like all three time frames are aligned in their bearishness. The only question we are really having is, will we see a little push higher before we continue lower? So that is all for Brent. What is happening with European carbon emission certificates? So on the weekly chart, we see that we have been pushing below the already descending trend channel for like the second week in a row. So yeah, the market is truly decelerating quite briskly. And we are probably now on our way to 67.12, which is a low from September 2022. So you can see, zooming out, we are undoing quite a bit of gains that have been made since then. Overall, I do believe that, the market is most likely to push lower in the next coming sessions or weeks, simply because the volume is extraordinarily high. The shorter term moving averages are bearish, the medium term moving averages are bearish, and we don't see any bullish indication from the stochastic. So once again, here for stochastic or any oscillator moving into the oversold territory, or let's say moving into overbought territory, this is not the signal. So moving into it is not the signal. Coming out of it would be one, and we didn't get one yet. So I say midterm bearish. So that means on the daily chart, I mean, of course, we have been doing that since forever now. We are looking for further selling opportunities. But right now on the daily chart, we have had, so the second half of last week was just it was just a little bit of indecision within 68.41 and 70. So you can see that three candles have like precisely remained within this range. So overall, the idea for the market is still to break lower. If we break higher, if we break above 70, there would be an indication indicated by the stochastic forming higher lows in oversold territory, but we haven't given a bullish signal yet. So for now, even if we were to break higher, we would probably only make it to this channel. So it's an old channel support. Yeah, the support, once broken, can turn into resistance. But the idea is for the market to just probably be rejected here and move lower still, or we simply move lower directly. But ultimately, the idea is still to move lower. So on the daily, on the 15-minute chart, this here is the tiny range that has been. Well, let me zoom out a little bit more. There you go. This here is a little bit of the range that has been happening, yeah. And here the idea is we want to see a bearish continuation below 68.34. Remember, that's the same level on the daily chart. That is part of the tight area. We've got the 70 right here. So here's the thing. If we break below 68.34, we'll simply continue bearishness, which would also mean bearishness on the daily chart. If we break above the trend line, we would probably neutralize any like short trade that we have. I mean, now it's Monday, so probably very few people would have gone into the weekend with an open trade. But if we break higher, then we would turn bullish. So that is it. So 68.34, probably bearish continuation. Above the channel, probably I wouldn't initiate any short trades, but at 68.92 we could be looking for long trades towards 70. But these are the really short-term plays intraday. And that is all for European carbon emission certificates. And that's it for this week's Outlook. If you found that useful, then please consider sharing it with your network. My name is still Marcello Kolax. You can find me on LinkedIn. I am very active there. Every single day I post my thoughts on the European energy markets there. So do give me a follow, connect with me, and check out what else we have to offer at clevermarkets.com. Thank you very much and see you around.